Thanks for joining me on my market report. My name is Mike, and if you're new to my channel or my videos, well, we create these videos on mortgage rates. We kind of give you the nitty-gritty of what's impacting mortgage rates on any given day. Sometimes it could be something from the economic calendar. It could be something headline news, or geopolitical. And even sometimes some news that appear to be good for bonds, sometimes it ends up being a negative for bonds. And we're here to kind of get into it and explain it for you folks. So for those of you who are kind of following rates where they're moving, hopefully this will give you some good information as to what to look for, and hopefully give you an help you make an informed decision to either lock in if you're looking to refinance or purchase, or I mean, if you're looking to purchase, hopefully it will help you as well, give you an idea where it's tracking, or if you're just in the industry and wondering what's going on as well. Without further, a little bit about myself is I'm a loan officer. I do work with the national lenders, so if you guys are looking to refinance or purchase, we can certainly help you guys out with those. Feel free to reach out to us anytime on those. But we're also here to be a resource for you folks. So if you guys just got questions about anything in general, like for example, mortgage rates or mortgage programs that might be available, stuff like that, we're here to help you out with that as well. So without further ado, we'll just jump right into this report and get right to it. We'll start off with the economic calendar. Today we got some HPIs, which is home price indexes. We've got two of them today. One's by Case-Shiller, which kind of measures the 20 largest markets, and then the FHFA are basically the conforming loan limit prices, homes. So, and then of course consumer confidence. So let's start off with the Case-Shiller. Uh, it's month over month. Basically, it was back in October. So this is a month for November. October was initially revised from 0.9% to 1% increase. Forecast was supposed to be at 0.9%, and it jumped up 1.2%. So its appreciation, again, year over year, was revised because of the revision upwards of the month over month, went from 18.4 to 18.5. So forecast coming for 18, but it came in a little bit lower at 18.3. So we saw home prices, they're still going upwards, but just in a slower pace right now. So we're starting to see not as big of increases before. FHFA, we'll start off with the month over month. Back in October was 1.1%, and it continued that same trend at 1.1% in November. So its year over year actually increased, went from 17.4% to 17.5%. So a little bit of difference there, but again, still good numbers. We're still seeing great data here. Last but not least, we got the consumer confidence for the month of January. So we had a revision to our December's numbers from 115.8 down to 115.2. Forecast is coming for 111.8. It did drop, but not quite as low as the forecast, and it went down to 113.8. Now, we did have the 5-year note Treasury auction and the 7-year note Treasury auction earlier, and it came in pretty decent. So markets seem to be reacting fairly well with it. Stocks are in negative territory. There's still kind of this contraction. Yesterday happened to see kind of a unusual day. Dow was way down, and it had a 1,200 point reversal. Actually closed in positive territory after being down about 1,000 points. So pretty miraculous. But again, now they're down in negative territory again. Dow is down like 200 or 300 so far this morning. So we'll see how that plays out today. So it just basically gives you the impression that nothing is ever safe, so to speak, or safe to assume anything. Today, just like yesterday, as the stocks improved, our pricing went downwards on the mortgage-backed securities. So we're up about 30 basis points, and we end up closing up around 11 or 13 basis points. So it closed in positive territory. However, a lot of lenders repriced for the better when it got to 30. However, some may have pulled that back, or if they didn't, just reprice it today. So our pricing today is going to be pretty close to what we saw yesterday morning when we first did these videos. And then, but again, we'll have to wait and see. This might get more improvement. Maybe we'll get some better pricing. But basically, our pricing is much more in line with what we saw opening yesterday versus the close yesterday. All right, so let's take a look at how volatile today it is. It is here's the volatility chart as today's chart. So we saw upwards, we went kind of a sideways pattern, then we went up again. So we're just in the sideways, when the sideways pattern, then we went up again. So this was kind of like when we're up about around 6 basis points, and went sideways and kind of jumped up over the last hour here. And then let's take a look here at the Treasuries. Treasuries have been a little more underperforming. They're up 1.765, as you saw here. We did test this, and it jumped upwards. It just broke above it slightly. We're still slightly above it. We're testing the next the ceiling. So it broke slightly above the ceiling instead of the floor. As I mentioned yesterday, this floor here seems to be pretty strong. As we saw the previous week, it tested, got 3 times before it jumped upwards. So we're hoping that this can hold tight and bring us back downwards, hopefully. But tomorrow we may not get the response we're looking for until tomorrow after the Fed gives their announcement. They are expected give their no rate change yet. However, there could be a rate hike as soon as March, as the taper is expected to be closed. They'll hopefully get some more information in regards to the balance sheet, because that's what really kind of disrupted the markets when there's talk about maybe a more aggressive approach than what they anticipated. So the change of policy. So that has investors on edge right now. This is what's going on. So this is why tomorrow's meeting with the change of policies will be important. There's some are holding out that the dove will be a little bit more dovish than what they thought, but chances are they're going to probably be a bit more aggressive, more hawkish than what I think some of those people will be expecting. And there's still a lot of investors who think the dove will come out a bit more hawkish. The concern, of course, they've been highly criticized for being behind the ball in terms of fighting inflation. They think they should have started this probably much sooner than later, and feels that they're kind of behind in terms of trying to fight inflation, and inflation getting a little bit out of control here. And speaking of inflation, we will get that number on Friday, which is the PCE data, which is the Fed's favorite gauge for inflation. So we'll get a better look and see where inflation is going coming Friday. All right. So lastly, we'll go ahead and take a look at the average rates for non-conforming loan limits, and we'll start with 30-year fixed, which came in at 3.66. These do have points built into them, and the 15-year is currently up about 2.92. So if you've been following my videos, you can see that they have been climbing steadily since, for some time. They've been climbing upwards over time here. All right, folks. Again, if you guys like these videos, we greatly appreciate if you guys could help our channel and smash that like button and share. If you guys got any questions, we're here to answer any questions you guys might have. We're here to help you guys out. Whether if it's you need a rate quote, go ahead and give us a shout. Or if you guys are looking for a refinance or purchase, we'd like to help you guys out. If you guys just got questions, we're here to help you guys out. So thanks so much for watching. We greatly appreciate you guys. We'll look forward to see you guys in tomorrow's video. Have a great rest of your day. Bye-bye.